In today's video, we're going to be talking about home office expenses. Good day, my name is Heinrich. I'm the owner of SA Accounting Network. In today's video, I want to chat to you guys about home office expenses. There's been a lot of talk in the industry about what SARS is going to allow this year and disallow. And I just want to give you guys and get you guys up to speed with what is happening at the moment. As of the 30th of June 2021, this is the current rules that's in place. We're still waiting for some clarity from the receiver of revenue on certain aspects of what they're going to allow and not allow. But I want to give you guys a quick breakdown of how home office expenses work. And I think especially with this COVID time that we went through, a lot of people were expected to work from home. And I just want to work through the guides with you guys just to give you guys an idea of what you can do, what you can't do, what you have to be careful for. And that is what the video is about. So remember to like the video, subscribe to my channel as well. And then let me get down to my computer so then I can explain to you quickly what this whole thing is about. So we've been studying a little bit on this whole thing about home office expenses, and we try to make this thing as simple as possible. There's basically three pieces of legislation that controls the deductibility of home office expenses. The first one is where they talk about Section 11, which is a positive test to say whether they will allow it. And then there's two other sections in Section where they actually disallow certain expenses. So I've created the spreadsheet that you guys can download from my website as well. I'm going to be sharing the link in the description of the video where you can get the spreadsheet as well. So the first question is, do you have a room that's exclusively used for home office expense? And then you can see over there, you can say that if you say yes, then you say, is the room specifically equipped for home office? Over there also you can go and say select yes or no. Because as soon as one of those answers are no, then it means that you can't claim. And so did you use the home office for more than 50% of the year? So over there is what you'll see, that if you select yes, then it means that you can claim for home office expenses. And what I've done is this thing where they talk about exclusivity. I've put the links on the spreadsheet as well, where you can then go through the SARS guide and what they say about exclusivity, which we're going to go through just now. I want to go through a bit into detail about this, about what they talk about the exclusive use of a premises or of an office. The second one over there is specifically equipped. So there's a little extract from the SARS guide that will give you some direction over there. And then the third one is obviously where we talk about if it's used on a regular basis or more than 50% of the year. So let's maybe just go through the basic calculation first. So if you're happy that you do comply with those three things, so the first one is the exclusivity of the use of the office, whether it's specifically equipped, and the other thing is whether you used it more than 50% of the year. Those are the three conditions which you need to comply with before you will be allowed to use a home office expense. But we'll talk about that a bit more. So this is just an example that I gave you guys. So you can see over there, I said that it's either the interest on the bond or otherwise the rent that you paid that you can put into the spreadsheet over there, the repairs and maintenance, electricity and water, all the normal stuff. So these are basically the things that SARS will allow under certain conditions or for most people. So whether you're salaried or commission earner, this is the basic expenses that SARS will allow. So in my example, that amount works out to 71,500 Rand. And then I can see they talk about the apportionment of the home office expenses according to the floor area. So they say that you must look at the floor area of your house. And what's important over here, if you look at the floor area, it's got to be the floor area of all the buildings on the property. So it can't just be just the main building. They want to know the floor area of the main house, plus the outside buildings, plus the garage, plus if you've got warehouses on your farm, all the stuff that you have to put into the square meterage over there. And then obviously the floor area of your home office, which in my example, I just put down 20 square meters. And it's quite important. We're going to go through the guide just now, but they said that actually must be able to prove to SARS how you did these calculations. So it can't just be a thumbs up type of thing. You have to actually prove to them how you did these calculations. Then you can see the percentage of your claim that you can deduct is 10%. And then you can see of the 71,500, then it works out to 7,150. But now they've got a second condition over here as well. Remember, we talked about the regularity of how regularly you use the property. So it's important that if you use the property less than 50% of the year, then SARS will disallow the home office claim. So it's got to be more than 50%. So we're going to go through the example just now that they actually give to show you how they do those calculations. So the second part over here I said working days during the 2021 financial year, there was 261 working days. Days worked at home, 150 days. So you can see 57% of the time you worked at home. So of the 7,150, SARS will then only allow 57% of that, which works out to 4,109. So that is whether you're a salaried earner or salaried or commission earner. So both of them, they get the same deduction over there. Now the second part is when it comes to commission earners only, and I think this is where there's a lot of confusion, because most people are under the impression that you can claim all the expenses at home, whether you just earned a salary, whether you just got a letter from your employer. They think that you can claim everything. We double checked it, and at the moment, as it stands now, unfortunately we can't. But if you're a commission earner, then you can look at what your telephone expenses was, what your internet expenses that you incurred for work, the insurance expense on the equipment only. So that's really important, that you can't claim everything in the household insurance. It must only be the insurance for your business equipment that you use, expenses like your cameras and laptops like that. And then any other relevant expenses such as office supplies. So you can put in stationery, list up all the other expenses. Now you can see over here, if you put in 10,000 Rand, you need to make an estimate to say, of the 10,000 Rand, you think you work 70% of your telephone, maybe you use that for work purposes. If your internet cost you 12,000 Rand for the year, and you think 75% of the time you use it for work purposes, then 9,000 Rand is what they will deduct. So you can see over there is a total for allowable expenses for commission earners. So then you can see over there is a total allowable expense for SARS would be 20,000 Rand. So for most people that just work from home, that would normally be under normal circumstances, would only be able to claim the 4,000 Rand. That's only if you earn commission, and your commission is more than 50% of your total income, then you can claim the other expenses as well. But let me jump down to the SARS guides and just give you a walkthrough of what is happening in the SARS guides. So at the moment, the guide that SARS uses at the moment, there's two guides out. So the first one is this one about home office expenses, and I think this thing is dated. It was released in 2011. So this guide is like 10 years old. So it's like donkey's years old. So they're actually busy rewriting this guide, and you can see the original guide was only 9 pages. And this is the one that we must still use, this interpretation note. The new one, you can see at the moment, is only in draft form, but we can get a lot of the definitions that the receiver of revenue uses out of this draft, because that basically tells us what they're going to be looking at, you see. So I think let's maybe run through both of them together at the same time. So you can see the old guide, and this is the current legislation, the stuff that we must use, where they just talk about the preamble, the purpose, the background, and then the law. And then, so the application of the law on the deductibility of home office expenses. So they talk about what is home office expenses, rent, interest on your bond, cost of repairs, other expenses in connection with the premises. And so in addition to these expenses, other typical home office expenses may include phone, stationery, rates and taxes, cleaning, office equipment, wear and tear. So here they just talk about the general rule in terms of section 11, where they, if it's something is in the production of income and is not of a capital nature, then you can claim it as a deduction. Requirements of 36M, and like I said, that's a negative test. So that is what SARS basically uses to block certain expenses that we can't claim for those expenses. Then on the next page, 6 is the requirements of section 23B. So an expense must still meet the requirements of 23B, even though it meets the requirements of section 11 and is allowed under 23M. The requirements of 23B is that a part of the home must be occupied for the purposes of trade. The part must be specifically equipped for the trade. Let's quickly see. So for example, taxpayers who meet clients at their homes would not be able to permit the deduction under this head. If they meet their clients in the dining or sitting rooms, a separate office would need to be equipped and maintained. See, so there they talk about it, that you have to have a separate office. And I was just speaking to somebody today, and I think this is actually very discriminating towards people that can't afford to have a separate office at their house, because a lot of people were forced during lockdown to sit and work from home, and they had to incur expenses, they had to pay the electricity and internet and all that stuff, and now SARS just comes and says, sorry, can't claim. But this is my opinion. Let's quickly see. The part must be regularly and exclusively used for the purpose of the trade. So they don't have a lot of They don't expand a lot in this practice note over here, but you'll see the next one that I'm going to show you, they actually expanded a bit on this. So here they talk about the regular use. As a regard of requirement exclusivity, it is considered that this provision contemplates that the part of use may not be used for any other purpose other than the taxpayer's trade. The deduction is not permitted where it is evident that the taxpayer conducts any activities of a private nature in part used for trade, such as permitting children to use the room as a playroom. If the trade is for holding an office, the income derived must be mainly, that is, must exceed 50% of total income, commission or other variable payments which are based on a taxpayer work performance, and the taxpayer's duties were not performed mainly in office, provided he is employer. So it just basically says that if you don't earn more than 50% commission, then that bottom part that I showed you guys just now, then you can't claim those deductions over them. So here they just talk about the conclusion, and they basically give us two examples. So the top one is of somebody that earns commission, where the commission is more than 50% of their taxable income. Then here you can see they tell us what they can allow us the deduction: pension fund, cell phone expenses and stationery, wear and tear, the travel deduction, interest on the bond, and rates and taxes. On the second example, they say that if somebody earns a salary of 50,000, commission of 20,000 rand, then on this example over here, they say the pension fund will be allowed, the wear and tear will be allowed, travel deduction, because he gets a travel allowance, interest on the bond, you can say 2,500, remember it's 10% of the total one in their example, rates and taxes, and you can see over here at the bottom they say the following expenses will be disallowed under section 23M, and so that is that section that blocks you if you earn less than 50% commission. Cell phone expenses and stationery cost and repairs of your computer of 2,000 rand. So this is the old guide, and I'll put it on the website as well with a little bit of a flow diagram, which is really difficult to understand, but if you guys can understand how it works, then you're welcome to use it. And the last part is just the little pieces of legislation. So here's the new beast. You can see at the moment it's still in draft form, but like I said, a lot of stuff that they put in here is the stuff that SARS and that they expanded on the first interpretation note that we didn't have all the clear answers for. So again, the background, you can see they talk about the law again, same expenses that they've got over there, and then you can see the general rule stays the same, section 11 stays the same, requirements of 23M, and that part stayed the same. Let's quickly see, the requirement is of 23B, that's the same. So here, I think there's something that changed. The part on the home, in respect of which a deduction is claimed, must be occupied for the purpose of trade. A trade includes employment, and therefore employees may, subject to the limitations discussed in this note, qualify for a deduction. So the part that is occupied must be specifically equipped. So remember in my spreadsheet, I talked about that little question over there where they're specifically equipped. So here they talk about the proverb, the definition of it. So there's clear from these definitions that a part of the premises must be considered specifically equipped for the purpose of trade and must be fitted with the instruments, tools and equipment required to conduct the trade. So I think, for example, so they talk here about mechanics, architects and doctors. So they must have their specific equipment for their trade. For an employee performing office type work, the likely equipment that the employee would need to have in the home office in order to escape the prohibition of the claiming a deduction would include a workstation and a chair, as well as a computer and communications equipment. So that is basically for most people what they would say to test whether your home office is specifically equipped. So now it becomes a bit of a tricky thing over here. The part must be regularly and exclusively used for the purpose of trade. So again, they talk about the definition of regular. So now it becomes tricky, as each case will have to be decided on its own merits. It is not possible to find what the word acceptable as regular use is for purposes of trade. However, a home office that is maintained and is only used occasionally, for example once a weekend, due to the taxpayer maintaining separate business premises, is not frequent enough to constitute regular use. So here they talk about the regularity test, and here's an example. Just say somebody works at home from 4 days a week, the other day is reserved for meetings, and then let's quickly see the second one. So P is an architect at ABC for the period March 2020 to December 2020. P took advantage of the employer permission to work from home 4 days a week. For January to February, P worked from the business's premises after deciding the specific equipment at the employer's premises was required. So only work from home 1 day a week, every alternative week. So the results for the period 1 March to December, P satisfied the regularity test and could qualify for home office deduction in respect of an expenditure incurred during that period. For the other 2 months, January and February, P will not meet the regularity test. So you can see, let's quickly see. So that is the short test that they, or example that they gave. So regarding the requirement of exclusivity, this provision contemplates that a part used for trade may not be used for any purpose other than the taxpayer's trade. Deduction is not permitted where taxpayer conducts any activities of a private nature. For this reason, it is submitted. Submitted will have great difficulty satisfying the burden of proof that the part was used exclusively for purposes of the trade. The part does not constitute separate rooms in the premises. Oh yes, if the part does not constitute a separate room in the premises. So they basically say here that if you haven't got a separate room, so if you're working in a dining room or anything like that, then you won't be able to claim the deduction. So here's an example now. Z's employer permitted Z, who is a computer service agent, to work remotely from home on a permanent basis. Z's work entails uploading and upgrading computer software. Z works remotely from a laptop on the dining room table in the dining room on the premises. The result, Z works from a laptop in the dining room and not from a dedicated space specifically equipped for the purposes of Z's trade. As dining room is also used for purposes other than trade. Therefore, Z does not meet the provisions. So you can't claim. Next one over here. R is employed as a tax consultant. R premises is a separate room that uses it as a home office, which is specifically equipped and regularly used for the purposes of R's employment. The office is the only north-facing room in the premises, and R's children are permitted to play in the room on winter afternoons and on weekends. Result, R's home office is not exclusively used for purposes of R's trade. No home office deduction is permitted. So you can see SARS is not playing games with this thing. They are really strict with what they will allow as far as this exclusivity test. I remember once I read in a textbook that even if you sit and read normal books in your study or the room that you use for work purposes, SARS will say no, that is not the room that is used exclusively for work purposes. That's why I think this whole thing is actually very discriminating, because people that can't afford to have a separate office at their homes, there's no way that they can claim. Next one, X and Y who are married. This is a very interesting case. Both of them work from home. X is a lecturer, Y is a tailor, perform the duties at home office, which is specifically equipped for the purpose of each of their trades and regularly and exclusively used for such. The area of the home is 18 squares and the building is 110. X and Y share this home office space to perform their duties and wish to claim a deduction for home office expenses. Result, it is a requirement that the home office be specifically equipped, which it is, for the taxpayer who is claiming the deduction straight, and that it be exclusively used for such purpose. Since X and Y share the home office space, it would mean that the home office space used by X would not have been specifically equipped solely for X's trade, but also for Y's and vice versa. In addition, since X and Y sharing the home office space, it cannot said to have been occupied exclusively for X's trade or exclusively for Y's trade. The use of a home office is therefore partially used for purposes of X and partially for Y. As such, the provisions of 23B must be applied, and neither X nor Y can claim a deduction of the home office expenditure. So this means that if you're a husband and a wife and both of you work from home, you have to be super rich, because each one of you have to have a separate office specifically just equipped for your specific trade before SARS will allow a deduction. As soon as you share any part of that office, then you are in trouble. Trade constituting employment. Let's have a look over here. So here they talk about commission earners. So commission derived mainly from commission. So if your commission is more than 50%, and then let's quickly see what else they say. But then you are allowed to deduct other expenses. But this is interesting over here. So typical examples of employees who could meet this requirement as traveling sales representatives who spend majority of their time on the road visiting clients, and commission earning information technology consultants who spend majority of their time at the client's premises. So that's where you have to be careful, because here they say the employee's duties may not be performed mainly in the office provided by his employer. So now you're going to have to be careful. You're almost going to have to keep a logbook as well. If you do have a travel allowance, you're going to have a travel allowance of the days that you traveled for work and then the days that you basically worked at home. Because if SARS picks up that on your logbook you said that you're traveling to go see clients, but at the same time you're claiming home office expenses for the same day, and they're not going to allow that. Non-commission earners, for employees who do not earn mainly commission, the duties must be performed mainly more than 50% in that part of the private premises occupied for the trade. Employees who do not earn commission but who spend the majority of their time on the road visiting clients perform the duties mainly at the client's premises, and as a result they do not qualify for the deduction. So here they talk about the mainly test. So L is a researcher who works at home Mondays, Wednesdays and Fridays. So they say 150 days during the year of assessment, and he worked 100 days. So we can see that he's worked at home for 60% of the time, therefore it exceeds the 50% requirement and therefore he can. Second example, due to restrictions, a software developer was forced to work from home April to October for the month of March, and for November he worked from the employer's premises. H was on leave from 1 December to 30 December. So the result, so now they say the total working days is 229. He worked at home 146 days. So then he meets the mainly requirement test. So there we have to be careful, because if you don't spend more than 50% of your time at your work, then you can't qualify. The test under provision B is quickly seen. What else is interesting? Yeah. So employee actually perform more than 50% of the employment duties at such part, whether or not the employee requires the employee to perform the employment duties mainly at home is not the test. So here, look at this. So that the wording postulates that an objective factual inquiry as to whether the employee actually performed more than 50% of the employment duties in such part. Whether or not the employer requires the employee to perform the employment duties mainly at home is not the test. It is for employees to prove on the balance of probabilities that more than 50% of their duties were performed in the home office. Employers often issue a letter to employees confirming that they performed their duties mainly in the home office. SARS is unable to accept such letters. An employer is ordinarily only able to confirm that the employee is permitted under the employment agreement to render employment services away from the employer's premises, and that the employee was not present at the employer's premises for a particular number of days. It is not with the employer's personal knowledge to confirm whether or not the employees performed their duties in the home office. So I know that a lot of our clients, we always say that as part of these important documents, get the letter from your employer stating that you work from home. But if you look at what they say in this practice note, that letter basically means nothing. I think it's a good substantiating thing to submit through together with SARS, that letter to state that you work from home. So here they talk about another example, the mainly test. So they talk about telesale marketing, maintaining hot desk in a small office. E is a salaried employee in a relationship with F. E and F own reside in separate properties. E's property has a separate home office, separately specifically equipped and exclusively used for E's trade. So during the year, the assessment in question, E performed the employment duties at ABC for 2 days a week. Every week of the year of the assessment, another 2 days employment duties rendered at E's home office, and the last day of the week E performed duties at F's dining room table. ABC has issued a letter to E confirming that E performed employment services for 60% of the year of assessment at her home office. Result: while the addendum to E's employment contract might allow E to work mainly from home, whether the requirements of 23B are met is a question of fact, which the employees are required to substantiate on assessment. The addendum does not conclusively achieve the purpose of the providing factual position. Further, ABC was not entitled to issue the letter to E because ABC was not aware of E's location the remaining 3 days of the week. The letter was factually incorrect. ABC could only issue a letter confirming that E was not in the office for 3 days a week. In this example, E only performed employment duties at his office 2 days of the week, so only 40% of the assessment, and does not meet the required mainly test. So you need to be very careful. Calculation of the deduction, so there they just talk about the deduction apportionment that you have to do. So with effect from 1 April 2020, and let's quickly see what they have here. So the result is also just, again, must be apportioned as follows. So there they talk about the square meterage of the house, yeah. So there they just talk about the earth size, permitted expenditure. So here they talk about repairs, expenses in the connection with the premises, then insurance. So this is interesting. Insurance costs are generally not claimable for the following reasons. A bond insurance is normally a life insurance product and is specifically prohibited from being deducted as it is a capital in nature. A household insurance relates to the contents of the premises and not the premises itself. I would still take a chance and claim insurance on your computer equipment that you use for work purposes. So because that is in the production of income. Expenditures such as phone cost, stationery, furniture, computer, communication equipment are not incurred in connection with the premises and fall outside the scope of what is permitted under 23B. Equipment may however qualify for wear and tear allowance under section 11E. Let's quickly see. Here they talk about fiber cabling, where they talk about the installation cost is not in expenses in connection with the premises and fall outside is what is permitted under 23B. And then here they talk about the calculation. Let's quickly see. So here they talk again about commission, and you'll see that this example is very similar to the one that they've got in the other practice note as well. So since more than 50% of his income consists of commissions, restricted tenure will not apply. Furthermore, X maintains a home office. So here they say pension fund contributions, cell phone expenses, 9,000, wear and tear, all the other stuff. Let's quickly see. X may claim a proportionate portion of the interest on the bond of rates and taxes being expenses in connection with the dwelling of the house or domestic purposes in respect of home office. The portion that may be claimed is based on the area of the home office, where they talk about the 10%. The second part of there is where income is not derived mainly from commission. So here again in this example, they give you the same information. So since less than 50% of Y's income consists of commission, the restriction imposed by 23M will apply. Y meets a requirement of 23B, that is, Y maintains a home office which is regularly used for the purposes of trade. So now they say that they will allow the pension fund, wear and tear, the travel deduction against the travel claim, interest on the bond, rates and taxes, renovation cost, 10% of that. And that renovation cost, I think, is still coming up, but they talk about it. It's got to be, if you maybe break a window in the kitchen, then you can't claim it as a business expense because it's got nothing to do with your home office. But if you have to repair the whole roof of the house, then you can claim a portion of that. So the following expenses will be disallowed because maybe it doesn't earn commission. Cell phone expenses and consumable stationery cost of 9,000, repairs cost of the computer. Capital gains tax consequences. So here, guys, you need to be very careful. What it basically says that if you're using home office and you're deducting 10% of your interest as a deduction for such purposes as home office expense, one day when you sell the house, maybe you get a 2 million rand exclusion on the capital gains tax, 10% of that exclusion falls away. So 10% of your profit that you make is you're basically going to have to pay tax on that, you see. So here they talk about, say, the 2 million rand proceeds rule for the disregarding any capital gain does not apply to the part of the premises used for purposes of trade. So you can claim now, you can get the tax benefit, but one day when you sell, you're going to have to pay it back to SARS again. Again, they talk about the apportionment, the floor area, and let's quickly see what else was in the guide. So that's just their conclusion. So I think home office expenses, it can be done, but you guys must make sure that you have proof of everything that you put onto your form. You must be able to prove everything. As I said, you must be able to give them the calculations, must be able to prove how many days you worked at home, whether the area was used exclusively for home office expenses. If you tick all the boxes, then by all means go ahead and claim for it. But if you don't, be careful, because I think SARS is going to focus in this area quite a bit. You can see just that guide that they updated. They took it from 7 pages up to, no, from 9 pages up to 17. So they definitely do mean business. And they can see that they updated those definitions. And I just wanted to share this with you guys. It's always difficult to explain all of this over the phone or try and explain it on the spreadsheet. But now you guys have the link. You can go watch it. I'm going to share, like I said, the link to the page where you can download the spreadsheet. And I'm going to put these 2 practice notes on there as well. If there's any updates from the receiver of revenue, I will put it on the website as well. Thanks again for watching. Hope you guys enjoyed it, and we'll be in touch.